First up, we're starting with Tongaat-Hulett, which has 4 business divisions: sugar, starch and glucose, and property development. It has a market cap of 17.8 billion rand, a price to earnings ratio of 12.3 and a dividend yield of 2.87%. So this one's quite well diversified. Yes. It's got that starch glucose business. I think SAB Miller is a big client of theirs. Of course, it's almost a property stock at the same time, because they've got big properties just north of Durban where there's lots of expansion taking place. And then, of course, they've got the sugar milling and the sugar production.
Look, this is one of the bigger players, obviously, in the market. I actually worked for the sugar industry for many years before I became an accountant.
Okay, so you're an expert.
I know a little bit about the sugar industry. Look, they are the same as all the other ones, having a tough time right now. They are the agricultural, specifically the sugarcane industry in KwaZulu-Natal, has been adversely affected by late rains and drought. Talking about the property, I mean, 5, 6, 7 years ago, this was the big plus for Tongaat. They sold off all north of Umhlanga, all the gateway is all on their own property up there. They've got 8,000 hectares of land they can develop and sell, but in the last year, they only sold 107 hectares. The demand has plummeted. They are still doing some, and they are talking about a couple of bigger land deals coming. But I mean, the previous year, they sold 210 hectares. So the property side, unfortunately, with the, I suppose, lack of interest in the property market in general in South Africa, that is suffering a little bit. They are more diversified than Illovo, for sure, and Crooks Brothers. But the starch and sucrose, it's still essentially a commodity type of business. They have got a few, you can call them home brands if you want to, where you can maybe get a little bit of an extra markup. But it is, at the end of the day, an agricultural business. And when you look at what's happened in their African operations, very similar. But one of the big negatives here, and it's the same for all of the companies, many years ago, I don't know how many years ago, the European Union had what they called a selected quota. So in all of your developing countries, Swaziland, South Africa, and everything, you could ship, and I think it was 20,000 tons of sugar or something like that to the EU at a very high price. That's come to an end now. So they're all suffering because this EU quota that they used to all partake in is now coming to an end because of agricultural reforms within the European Union. So it's another reason.
At the same time, we're seeing a euro weakening on the back of quantitative easing in the European economy. If we take a look at the share price, as you mentioned, a bumpy ride, a choppy ride. You see the dip there that you talk about. So sugar prices coming down, late rains in the summer. I mean, your long-term view on sugar price in general, because it's quite a contentious issue.
Correct.
You know, a lot of it can be used for renewable energy, which they do in Brazil. And of course, as a food source, there's a lot of scrutiny about the health effects of sugar. You know, fizzy drinks coming down, people being more health conscious. That long-term trend, do you think it's going to have an impact on the sugar price?
Look, it will probably have some sort of impact, but understand this whole health thing. This is a first world issue. It's not a third world issue. And the biggest single demand for foodstuffs, as the Chinese economy gets richer and richer, they're going to demand more and more protein in their diet. So the actual real demand. So I don't think the health conscious aspect will have a major impact. But the sugar price is incredibly volatile. I mean, you can go from 5 US cents a pound to 15 US cents a pound and back to 5 again extremely quickly. And that's what causes the variation in their prices. You know, up until, I think, mid-90s, South Africa had a protected sugar industry. It was protected by tariffs, and you were virtually guaranteed a certain return on the capital that you invested. The price was fixed. The price is no longer fixed. So the price that you can charge for sugar here effectively is your import parity price, because otherwise you'll just import from Brazil or you'll import from somewhere else. And it's relatively cheap to transport in bulk, so that's not a problem. So it's a very, very volatile and a risky a business to
And another issue for Tongaat is their single biggest profit-driving sugar area is actually Zimbabwe.
Yes.
I think they bring in about 350 million rands worth of profits from that division. Of course, whenever you talk about Zimbabwe, there's indigenization issues. I think 350 million rand profits, that's probably similar to the whole Zimbabwean budget.
Yeah.
So they're definitely going to want to get their hands on some of that.
Yeah.
What's happening there? Have they been approached? Are there negotiations underway?
There are negotiations underway, but understand you can't kill the goose that lays the golden egg. So they're not going to destroy the operation.
Have done before in the past.
Yeah, but I think maybe they've learned a little bit from that, because if you do that, literally you get nothing from it. But clearly, they've had problems in the past repatriating the capital. I mean, the Zimbabwean operations, I think, just slightly smaller than the SA operation in terms of sugar output. So it's a massive, I think it's what, 500,000 tons or something of sugar out of Zimbabwe. So it's a massive, massive operation. And of course, that's one of the reasons why you're sitting at a 12 price earnings ratio on the share, is because of the uncertainty surrounding those operations.
So you'd assume that the big drop we've seen in the share price has predominantly got to do with the sugar price, which has come down. Yeah. Are you hot or not on this one? Is this a buying opportunity?
No. I think it's too volatile.
I agree with you. I think it's a bit too volatile. Obviously, the property side is quite exciting, but we're not looking at this as a property investment. No. We're looking at it as an agricultural investment.
And also, I mean, the property side, for the first time ever, we've had a trough in interest rates. And interest rates, as we know, are at 30, 40, 50-year lows, where you have not had a property cycle upturn. It's highly unusual. And the next move in interest rate is not down, it's probably up. So, unfortunately, another property boom is maybe a good few more years out from where we stand now.
So we agree on that,
yes.
Both not hot on Tongaat.